Hey, are you thinking of selling your home but unsure if right now is the right time? Look, there's a host of considerations, and we know the times right now feel uncertain. I'm Robert with Robert Mitchell Homes and Rodeo Realty, and our brokerage has access to the top market analysis, and we've been operating in Southern California for over 30 years. So I thought it would be helpful to share some of the analysis I've heard, and we can examine some of the market conditions and hopefully address concerns. Without a doubt, the number one hesitation I'm hearing from sellers before they put their home on the market is that they won't be able to buy their next home after they sell their current. I get it, no one wants to be homeless. Fortunately, our brokerage has a few solutions to address this concern, including a buy your next home before you sell your current program, which I'd love to discuss in detail when we meet. Or take a moment and leave a message down in the comments requesting my seller's handbook, which has more information on our buy before you sell program. And to that point, if you are at all interested in this type of content, please consider subscribing and hitting the bell, as I would love to know if this type of information is helpful for you, and I have a ton more content to come. Okay, handled that. Now back to the program. The second most common reason I'm hearing that's creating concern among housing sellers is a fear of a potential collapse similar to what we saw during the Great Recession. And that seems to be on everyone's mind. As a matter of fact, Google searches with the phrase, "When is the housing market going to crash?" has shot up nearly 2,500% over the last 6 months. These concerns are most likely a byproduct of the competitive real estate market itself, which end up sparking memories from the last peak we hit in 2006. Check out some facts from analysts at JP Morgan, Fitch Ratings, and the National Association of Home Builders. We saw gains in home prices over the last 5 years. This brought the National Nominal House Price Index 40% above its 2012 low point, but it's only about 4% above the peak reached 15 years ago in 2006, given inflation. So you may be thinking, okay, great. What does this actually mean? Well, in plain English, the market dropped so low after the recession and the recovery was so slow on the uptick that the prices we're seeing right now are long overdue. And they've actually brought housing prices to where they would have been with normal growth if it continued from 2007 until now. That said, analysts do believe that home prices may be 5% over the ideal. So we may be heading towards a slight cool-off period, but it's not going to be anything game-changing at all. We are not going to see a housing crash like we did 15 years ago for a host of reasons, including the mortgage credit availability has been regulated now, so there are less bad mortgages and bad paper. Also, homeowners are pulling much less equity out of their homes now than they did in 2007, 2008. And then 3, during the Great Recession, we had an oversupply of inventory or homes, and now we're seeing the opposite. There's an undersupply. Now, if you'd like additional details or references, please leave a comment down below requesting the Housing Market Guide, which I will pass over to you, and it's filled with data from these analysts and background info. To my last point regarding housing supply, there is a considerable imbalance between buyer demand and low supply. And of course, this is a major factor that's driving up the price. According to a report released by the National Association of Realtors, underbuilding and underinvestment has been an issue for decades. In the period between 1968 through 2000, the U.S. housing stock grew by an annual rate of about 1.7%. But in the period between 2000 and now, it's only grown by 0.85%, or half. And this shortfall is particularly heavy in the starter home segment, which has greatly impacted first-time home buyers and the ability of millennials to form households and start families. This report goes on to mention we have a supply gap totaling 6.8 million units nationally. We are 6.8 million homes short. Look, housing is critical infrastructure, and we need new government policy to tackle the planning, funding, and development of new housing to fit this need ASAP. As a matter of fact, I'm going to cover this in detail on a subsequent video, so please take a minute, like, subscribe, hit the bell so you get the reminder so you can see that video coming out shortly. Well, now you may be thinking, this is all great info, but why is this applicable to anyone that's considering selling? As I mentioned, much of the housing availability deficit is in that starter home or first-time home buyer segment. So, if you're looking to sell and upsize to a more expensive or larger home, you are not going to encounter the same challenges felt by those buying their first home. If you'd like additional details and specifics on this infrastructure shortfall, please leave a comment down below requesting the infrastructure report and I'll get it over to you. I'm also getting asked quite a bit about interest rates and if they're going to go up. Let's take a look at 2021. They have remained incredibly low, historically low, and the Fed has recently committed to holding rates steady until 2023. I could go on and on about these topics, but I'm going to stop here and dive in deeper on subsequent videos. But if you enjoyed this content, please consider liking, subscribing, and hitting the bell, or leaving me a comment below. And as always, if you have any questions about real estate, shoot me a message. My info can be found at robertsellsla.com. I'm Robert with Robert Mitchell Homes and Rodeo Realty. Till next time.